We're also continuing to await some key manufacturing data. We've been talking about this all morning long. Weak manufacturing data across the globe, China, Europe, you name it. We're going to get some here from the U.S. soon.
Yeah, and the U.S. Data is actually coming in a little bit better than estimated. So ISM Manufacturing, Institute for Supply Management Manufacturing Index coming in at 52.8. That was versus an estimate of 52. This is the July figure, by the way. Prices paid coming in below estimates and showing a pretty good drop from June at 60 versus the 74.3 that was estimated and the 78.5 from June. New orders, though, a little weaker than estimated at 48 versus the 49 estimated on this index. And the employment reading a little bit stronger than estimated, 49.9 versus the 48.2 estimated. We also, by the way, just got construction spending. That's a bit more of a dated number. For June, month over month, it fell by 1.1%. So overall, on that manufacturing number, a little bit more encouraging, perhaps, both on the price front, seeing a little bit of alleviation, and on the headline number as well.
I'm going to lock in on that construction data. You can cue that potentially disappointing quarter from Caterpillar at this point in the week. And if the quarter's not disappointing, you would have to think a company like that is going to take a very cautious approach to its outlook.
Yeah, it's interesting. Some of the comments that we had seen, even from economists going into this report at S&P Global, saying that the Eurozone manufacturing sinking into an increasingly steep downturn. It also is an international picture, of course, that we're tracking with a company like Caterpillar because of where those contracts lie. And so I think going forward from here, even as we're looking at new orders and where they come into fruition for a company like Caterpillar or even some of the other major manufacturing equipment companies out there, I think that can give us a little bit more insight into where those new projects are even starting or where they're halting and where a pullback in some of the larger real estate, but large construction projects are perhaps pulling back as well more broadly.
Yeah, I'm just looking through the release from the Institute for Supply Management. Just wanted to highlight a couple of things. The low overall number of 52.8% for manufacturing was the lowest reading since June of 2020. At the same time, that prices index at 60% is the best reading, the lowest reading on prices since August of 2020. So that, again, may be encouraging, may be a sign of what's going on the inflation front. Another interesting tidbit in here, panelists reported higher rates of quits on the employment front, reversing June's positive trend. So that's still showing some tightness in the labor market here. So interesting stuff to dig through in this ISM report.
Absolutely. We'll continue to keep track on how the markets move based on that.